Every day's a long day, Rebecca, don't you think? It seems like it just seems like days are longer and longer. I don't know. I did get some stuff done today, though, in my office, so I feel pretty good about that because some days it seems like I go and that my list is longer by the time I leave than when I get there. So I'm a little better today. I've been home a little longer than usual, and I thought that that might make me feel more energetic, but I think it makes me more tired. Yeah, less sleep. It's tough when you're getting to the end of the semester, no matter what. Yeah. I know. I started my week on Sunday night. I did the worry thing where all I could do was think about everything I had to get done this week. So instead of sleeping, I laid awake so that you start the week so exhausted that you don't know how you're ever going to survive. Okay. Tonight, my thought process was that we would look at reviewing for the final. I see we have Susan and Kelly, Shad and Rebecca and Melinda here right now, and that's good. I think, or I hope that you have all downloaded the final exam study guide. Have you done that? Okay. Have you started working on it to see if you know the answers? Yep. Have it and printed it out. Well, my thought process would be for you to either print it out now if you can, or have it open so you can type notes or you can write notes if you want. Okay, so I'm going to use the study guide as kind of talking points tonight. So there's not going to be PowerPoint slides. I just want to make sure that everybody's got under their belt what they need to get done for how to prepare for the exam. And then I can come back next week at this time if you haven't taken the exam, but I know a lot of people have scheduled to do their exam already, and it'll be done before the 17th or the 18th, whatever next week will be. What would next week be? I guess next week would be the 18th. So anyway, if you're done with your exam, that's what we'll probably still be doing next week is going over reviewing for the exam. Susan, have you already done chapter or session 15? Or is that what's due yet this week for you? Okay, so Susan's just studying for the final. I want to do a quick review for the people who are online, and this exam or session 15 is still to be done. And some of you have done this, I know, but you needed to make sure, and you don't want to lose these points, but you want to make sure you do this final exam review quiz. You will probably do better on it if you have looked through the study guide a little bit before you click into it. Another thing you want to make sure you don't miss at all are the 30 points possible for the final exam concepts discussion board. There's already a couple of really good ones posted in my online class, and you just want to make sure that you write at least 3 complete sentences for each concept and that you're actually explaining the concept. And then it's very useful to go out and read your other students, your other classmates' posts too, as a way to review for the exam and to maybe get some different thought processes flowing. But if you look through your study guide and then you see something that you don't understand and you're going to have to look up anyway, those are good concepts to use in that concepts discussion board so that you're not duplicating your work. Okay. As you see, the review quiz has 40 minutes for 20 questions. It shouldn't take you that awful long. And that's what, we're going to talk about the study guide, as I said. But before I do that, I want to make sure that you all know in session 16 then, that's where you'll find your actual finals. And all of the chapter concepts are listed with the main objectives. Not really lots of help for the exam, but it just tells you the main objectives in each chapter. And then you have your final exam part 1 and final exam part 2. Each of these is worth 50 points, or it has 50 questions, and it's worth 2.5 points apiece for a total of 125 points per section. You don't have to do both parts, part 1 and part 2, without taking a break. So if you you have your appointment, and if they will let you leave, you can get up and take a break between the two parts. It shouldn't be a problem. There's no time limit. You'll probably finish these much faster than you finished any of your actual other exams because you're going to study and prepare, and you'll zip right through them. They do have a password, so nobody panics if you have not sent in if you have not sent in your proctor information to your instructor. Then you're going to get there. You can schedule appointments all day and all night. You get there to take it, and if they don't have a proctor form for you, they don't know the password. So if you can't get hold of somebody, I know in Richmond they're really, really good, or Connersville, or even Rushville in our region. If you get there and there's not one, they're going to hunt us down and try to get you in. So you may not be that lucky in some of the larger sites. So make sure that you've provided the information to your instructor and that you know where you're going to take it. When you get ready to click into the exam, then just so you're not shocked, you get in and the password has to be entered by your proctor when you get to that point. So you cannot click into the exam accidentally. Okay. And you guys are all pros, I know, at going out and taking exams and going to proctor sites to do that. I put on my proctor sites that you can use a calculator and scratch paper. That should be across the board, but it may not be. You should not be able to use Excel, although Excel is my best friend and I would love to be able to use Excel. But you need to be prepared to just use a regular calculator when you go to do this. Oh, this is someone's first proctored exam. All right. It's fine. The stress might be finding where you need to be to take it and everything, but it's really okay. Oh, so a few of you haven't been doing proctored exams. I just thought that it was just pretty much the way of the world today. Everybody's going to find the right room real easy. Have you been to, you're coming to Richmond, right, Blue? And have you been to campus before? Okay. All right. So when you walk in the door to the main campus, let me just tell you this so we can try to reduce the stress. When you walk in from the parking lot, the Learning Resource Center will be straight past. You just keep walking straight past the fountain and it'll be on your right. But you can always stop at that first window to your right when you first walk in the doors, and they will direct you anywhere in the building you need to go. So that may be, if you're feeling stressed and worried, just stop at it's called the FAS window, and they'll help you out. And you can always see if I'm there and talk to me too. That would be great. So that's where I would be, back in that area. Okay, so when we get ready to do the exam, you'll have the 2 exams. You'll have to put the password in for you both times, okay? 2 times. Okay, and I'm going to just get out of here, and I'm going to pop over to the study guide, and maybe if I get real lucky, I will be able to, I have some old quizzes from what the exam was originally created out of a textbook. It's been updated, but I actually saw a couple of things in it when I was going through it earlier tonight that I need to go fix, a couple of date issues. So I'll try to have those fixed so it's not so confusing. Nothing's worse than then for example, I saw something that says the beginning supplies in January 1st of 2006 were X amount of numbers, and then you made purchases on through the year in 2012, and then what is the ending balance in 2012 or something like that, and it's like, okay, how do we get from 2006 to 2012? And that can just completely blow your mind when you're out there stressed about taking an exam and all of a sudden the dates are crazy. So all right. Oh, is that where you keep going each week, Katrina? You're at work and then you disappear because you're at work? All right. So yeah, so I'll post this in the class session, and I'll go back. I didn't post last week's in the class session. They always become available on YouTube, but I know last week I got an email from central office that said, well, it was this week actually, I think it was probably Tuesday, and they said they finally had it posted, and so that's not very timely. So I will upload these for you. Okay, final exam study guide. Let's start talking about Chapter 1 to begin with. And like I say, I hope you can all run out and pull this if you're someplace that you can pull it, if you're at home and you can pull it and go ahead and print it, or if you want to save it and type into it, whatever works for you, because I'm really just going to be talking. I'm not going to, I'll pop up an Excel sheet every now and then and show examples, but that way you can make notes on your study sheet as you go along, and that should help to refine your studying. And just start thinking about in Chapter 1, and that's where this pulls back to, what is accounting, right? And why do we do accounting? Well, of course, accounting is the language of business. Do you remember hearing that? We need to have one common language or way of speaking of the numbers that everyone can understand, and I guess I shouldn't say everyone. Anyone who has studied the accounting or business can understand. It's to keep the financial records of the company. I will tell you, when you get to the questions to answer about what is accounting, you will be able to pick out, oh yeah, that's what they were talking about on the study guide. You need to know the definitions of revenues and expenses, and the best way to do that is to actually just go to Chapter 2 in your textbook. I can give you pages here in just a second. And it is, I would tell you, it's just a little different. That's why I always try to go through and do the test and quizzes, so that I can try to provide better guidance based on what the wording is. But for instance, revenue here in our textbook on page 56, Chapter 2, page 56, it says that revenues are the increase in stockholders' equity from delivering goods and services to customers, right? And so that's exactly what it is, but what is it specifically increasing? Which stockholders' account do revenues specifically increase? Do you know? Which stockholders' equity account revenues specifically increase? And think about when you're doing the closing process, what account do you close revenues to? Right, retained earnings. And so really the definition on the exam is just very, very similar to what this book says, almost identical, except they don't use stockholders' equity. They use retained earnings. Yeah. The retained earnings is what you close. Your net earnings, or your net earnings, are moved to retained earnings. So again, the increase in revenue, or revenue is the increase in the stockholders' equity or retained earnings account from delivering goods or services to customers. And so when you read, what I'm trying to give you here is, you look up these definitions for revenues and expenses, and you write those out, or maybe you do use some little flashcards or something. I'm a big flashcard believer, especially if I have to be away from home a lot. Flashcards are a convenient way to study. Plus, writing on those flashcards, to write them down in the first place, helps me to remember by just writing down. But just remember that it can be more narrow than what the definition in the book is, or it could be a broader definition. So, I mean, and that's truly testing your concepts of, if you know that it's retained or stockholders' equity account, then would you know that it's specifically retained earnings, that type thing. And then for expenses, it's the cost of the operating the expenses. So expenses, of course, decrease our stockholders' equity or our retained earnings over time. And that all flows through the statement of retained earnings, where we compute our net income first. And then that's where we actually see how it increases or decreases our retained earnings account. So again, you'll want to look up the definitions of revenue expenses. Clearly, just look them up. You can either, if you download this as a Word document and you want to type it in, if that works well for you to study. Like I say, I really think flashcards are a great way to study. Basically, you need to know the difference of internal and external users. Can you give me some examples of internal users? Can you type me in some examples of internal users of financial information? Managers? Anything else? Management. So internal financial planners, okay, financial planners. Yeah. So we have planners and managers. Can you think of any other internal users? This is a Chapter 1 question. Yeah, the internal auditors of the companies, the accountants, the bookkeepers. How about some external users? Investors, the external auditors, IRS, yep. The financial accounting information is used by perhaps our creditors, our debitors, customers who maybe are going to buy from us, want to make sure we look like we're sound financially. If we have companies who are going to extend credit to us, so our vendors or our suppliers, they're going to want to make sure that we look sound and secure as a business, so those can be external users as well. Okay, so it sounds like you have a pretty good understanding of that. The question can be listed several ways. It can be, I know how it's listed, but I'm going to give you a few examples of how we might ask this type of question. It could be which of the following groups are internal users of financial statement, and so then they might have 3 internal users listed in A, and then they would have 3 externals in B, C, and D, right? And then you would choose the correct one. They can, of course, say which one is not an internal user or which one is not an external user. So you just need to be familiar with that. So again, you can make a list of those and study them. Question number 4, where it says FASB, which stands for Financial Accounting Standards Board, is the answer to a question. And it's an answer to a question that says, who is responsible for GAAP? Generally accepted accounting principles. So that's really just an answer. There's not really anything to look up. It's something that it is in the book, but it's a little hard for students to find. So it's just on the study guide that you need to know that FASB is responsible for GAAP. You should know what the accounting equation is. Can you tell me what the accounting equation is real fast? Yep, I got a fast one. Assets equals liabilities plus stockholders' equity. That is correct. It can also be assets plus, I just want you to keep this in mind. It is assets equals liabilities plus stockholders' equity. What if it's a sole proprietorship? Do we have stockholders' equity if it's a sole proprietorship? Or a partnership? No. What's it called? If it's not stockholders' equity, what is it called? If I'm a sole proprietorship or a partnership, it would be assets equal liabilities plus owner's equity. Yeah, we have a guess. It has a question mark under it, but it is after it, but it is owner's equity. If I'm a sole proprietorship or a partnership, then I have capital accounts, and those are called owner's equity. So remember, it's either owner's equity or stockholders' equity. That's going to be important. That's something that trips students up sometimes when we bounce between stockholders' equity and owner's equity. They're like, no, the accounting equation is assets equals liabilities plus stockholders' equity, and that's not one of the choices. So just keep in mind that it could be owner's equity instead of stockholders' equity. Keep in mind that it could also be stated as assets minus liabilities equals stockholders' equity, or assets minus stockholders' equity equals liabilities. Any of those would be suitable methods of stating the equation, because bottom line, it is an equation, and you can manipulate that equation. So you'll want to know that. Here's another answer, number 6, if you're making notes. The International Accounting Standards Board is responsible for developing a single set of worldwide accounting standards, which are called IFRS, or International Financial Reporting Standards. So, there's another answer. You will have a question that you will use that to answer. Number 7 says these standards will help companies to reduce accounting costs, make it easier to acquire foreign companies, and facilitate comparisons between the foreign companies. So that is just an extension of what IFRS does. So that's another answer. These standards will help companies to reduce accounting costs, make it easier to acquire foreign companies, and to facilitate comparisons between foreign companies. Number 8, know what the primary objective of financial accounting is. I would tell you that the other night during class, I knew that this was in the book, and I looked and I looked and I looked because I wanted to find the specific wording that's in the book, and it took me forever to find it. It wouldn't take you that long, I'm sure, because you're all sitting there with your electronic books, but it actually is on page 6, and down under the Explain and Apply Underlying Accounting Concepts, Assumptions, and Principles. It says in the second paragraph, the overall objective of accounting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions. So it's, that's what it is, to provide information for decision makers, the primary objective of financial reporting. What makes information relevant? You might want to visit the chart on the top of page 7 in your book, Exhibit 1.3, to remind yourself of what the conceptual foundations of accounting are. Those include relevance, faithful representation, comparability, verifiability, timeliness, understandability, cost, and financial reporting standards. It is interesting sometimes when what makes information relevant. Does anybody know, by the way, what makes information relevant? It is needed. Yeah. It's information that will make a difference to the decision makers. It's relevant, or it would make a difference in the decision they might make. And again, that information is on page 6 and 7 in your book early in the chapter. Assets are recorded at their historical or their original cost because it is objective and verifiable. So again, there's an answer. When we talked about fixed assets or plant assets such as equipment or buildings, we talked that we recorded them at their historical cost. You know, we recorded them at what we paid for them, what they actually cost. It did not matter what they were appraised for or what someone else might have been willing to pay for them. It was the actual cost of what we paid or amount that we paid. That's verifiable because we can see our bill of sale. We know exactly what we paid for it, so that makes it verifiable. And then, again, it's objective because, again, it's a number that we really paid, where some things are, it's subjective unless it's what the actual was. So that's another answer, as I said. Historical cost is used because it is verifiable and objective. Who should be able to understand financial information? Do you remember reading that? What does understandability mean? Should it just be anybody out on the street? Should we be able to run, or anybody shopping at Walmart? I'll pick on Walmart. What if we run into Walmart and we just start asking it or showing someone a financial statement? Should every single person be able to understand what those numbers mean? Okay, so Rebecca says anyone who needs to read it for making decisions. Shad doesn't think everybody should. Anyone who makes financial decisions for the business, investors, all of those folks should know how to read it and to understand it. But what understandability actually means is that the information must be sufficiently transparent so that it makes sense to a reasonably informed user. Okay, so that should be your investors, your creditors, your regulatory agencies, and your managers, right? So you guys are hitting on it, but the key may be the words reasonably informed users, okay, or those who take the time to learn what they need to know to understand. It's all right, Julia. Just glad you made it. We're actually just reviewing for the exam, so hopefully you can get caught up here. We are looking at the study guide that is under session 15 if you want to pull that. Okay, balance sheets. Balance sheets list your assets, liabilities, and owner's equity or stockholders' equity. Here again, it's referencing back to owner's equity, so don't let that throw you. Of course, the income statement, I hope you all know, is revenues minus expenses. That equals the net income. And again, that's just what the next question says. Or number 14 just states that. And then you need to know the order of income statement preparation. Which financial statement do you prepare first? I have two answers so far, and they're two different answers. Okay, we do prepare the income statement first. Why do we have to prepare the income statement first? And to get the net income, I need to get the net income for the second financial statement I prepare, which is which statement? Yep, we need it to compute the retained earnings. Right, statement of retained earnings, because then we get our beginning retained earnings plus our net income minus our dividends to get our ending retained earnings. Why do we need to compute our ending retained earnings? Next, why do we need to do that before we do the balance sheet? Right. If we don't use the updated capital on our balance sheet, we're never going to get our assets to equal our liabilities plus our stockholders' equity. And I suspect many of you made that mistake on different times when you were working on homework. So, and then you can do your statement of cash flow. But the three main statements are the income statement, the statement of retained earnings, and the balance sheet. Which one of those is dated with a specific date instead of period of time? Yep. The balance sheet has a specific date, December 31st, 2014, not for the month ended, not for the year ended, but December 31st. It's a snapshot in time, okay? It's chapter 1. Yay! Chapter 2, we're going to define and know the different types of accounts. That's where I had already had you defining revenue. So you're going to go and and expenses. You're going to look at the beginning of chapter 2 and you're going to study the definitions for all the different types of accounts that it lists there. It's going to give you your asset account, liabilities, stockholders' equity. You're going to want to understand what each of those are. Okay? And then we're going to look at how transactions affect the accounting equation. We did lots of this at one point in time. I may even be able to find that spreadsheet if I pay attention here. Let's see. Maybe I can't. I can't. Remember when I had this little handy dandy worksheet that I used for a while? So let's think about, and we'll use the overall umbrella. I always forget you can't see my hands flying around here. Assets equals liabilities plus stockholders' equity, and then I just had the different type of account here showing what would happen if I purchased supplies on account. How would that affect the accounting equation if I purchase supplies on account? Yeah, I tell you, the rules of accounting, this is priceless. And I think that I posted this out there in one of the class sessions the week that we did it. So, Susan, if you would like one of these, I can email this to you too. But it's just a little cheat sheet that I was using when we were doing a webinar earlier. Yep, so we would increase our assets and increase our liabilities. Okay, I'll make a note because I'm forgetful to email this to you. Okay. Okay, I have someone who is needing a phone number to dial in. Let me see if I can find that for her real quick. Hang on. Oh, Glennis got there now. All right. That's great. You guys are good. You guys are way ahead of me. You know what you're doing a lot more than I do. So good for you. So Glennis is here now. Welcome, Glennis. Can you hear me now, Glennis, or just on the phone? On the phone you got in on the phone. Okay, good. Okay, you guys get a lot more information than I get. I just click on a button and go to webinar and you're there. I don't know how all the magic works. Okay. You're all right. We're just reviewing we're going over the study guide. For those of you who arrived late, we are going over the study guide that's found in session 15. It's a Word document. You can download the study guide. Then I just popped up this rules of accounting because we were going to practice here for just a minute. So we had just looked at what if we purchased, I don't know, I think I said supplies on account, and the answer was we increased assets and increased our liabilities. What if we were starting up a new company and we invested cash in the company? We're going to invest cash in the company as we're starting a new business. How would that affect my accounting equation? Okay, decrease cash and increase cash and stockholders' equity increase. Okay. This is, I will tell you that when I word it this way, people get confused lots of times because it's saying, well, if I'm investing cash, then I have less cash. But you have to remember that if I'm investing cash as an individual into the business, then the business is getting that cash. So cash and stockholders' equity both increase. So yay, Suzanne, you got it. Yeah, I don't know what I said, Melinda. Maybe I said it in another business. If I'm starting a business, if I'm starting my own business by investing cash, is what I meant to say. That may not be what I said. Sometimes my mouth doesn't say what my brain's thinking. So you've got to catch me. Okay, what if we collected cash in advance? So someone paid us in advance. Yeah, for work. We'll say, sure, for work. Cash in advance for work we have not yet performed. We're going to increase our liabilities. Yep. We'll increase liabilities, and what else do we? And increase our cash. That's right. So you guys have this, and it's just, you can't take the rules of accounting in with you, right? Because it's a closed book test. But what you can do when you get in there, since I said you can have scratch paper, is you can have this in your head when you walk in the door from studying, and the first thing you do is with your scratch paper before you even open an exam, or go ahead and open it, it's fine, it's not timed, let them get you going, and then you sit there and you write down these rules of accounting before you even start looking at any of the questions and get confused. And it will keep you from getting things twisted up if you're inclined to do that. It's pretty easy to remember just for a little bit until you get in the door, because if you recall when we looked at this way back in the beginning, we looked at the red accounts or the debt accounts. The debt accounts is what we use to remember that we debit assets. Well, we said we debited expenses, assets, and dividends. And that would help you know that those are the ones that increase on the debit side, the debt account, and the first D stood for debit. And that will help you to get through the test. I mean, it just really does. And other things that I like to do is write down a little short inventory. If I bought 3 at $1 and 4 at $2 and 5 at $3, then when it asks me questions like in periods of rising prices, which would yield the lowest net income, or which would yield the highest cost of goods sold, or the lowest ending inventory, then I can just use that little chart that I've created to have a visual to figure that out. Okay, so again, this was just, I don't remember what else we had on here. We had lots of stuff on here, didn't we? We had a whole accounting cycle problem. Okay, let me go back to the questions. So practice your transaction analysis. There's tons of those in Chapter 2. And know how that what happens when the owner invests in the business, which is basically what I said when I invested in my own business. I want to know what happens when I purchase supplies for cash, or I purchase supplies on account, when I earn revenue, when I receive cash for revenue, or when I earn revenue and receive a promise of pay or accounts receivable. I want to know all of those things. I want to know that debit means left side and credit means right side. I hope everyone knows that. We want to know the initial recording of the transaction. This is again an answer, is made in the journal or the general journal. We call that, we are journalizing, recording, completed journal entry. It can be used, all of that terminology means the same thing. We are recognizing that expense or recognizing that revenue by recording it in the journal. The entry is then posted to the ledger, the general ledger account. And why do we do a trial balance? What's the purpose of a trial balance? Yeah. We want to make sure that debits equal credits. Right. We want to make sure that debits equal credit. We're proving that our debits equal our credits. That's all that trial balance really does. Okay, and make sure that there aren't any errors before preparing a financial statement. It doesn't necessarily mean that there aren't any errors. It would be great if it did. I have a boatload of students who just went through doing a project for one of my accounting classes that will tell you, in fact, they know for sure that's not true because they felt very confident if their trial balance balanced. But if you make your entries into the wrong account, but you're debiting and crediting everything, your trial balance is going to balance. So you won't necessarily be correct, but it does show you if your debits and credits are out of balance. What's the difference between accounts receivable and accounts payable? How do you end up with receivables on your books? Our customers owe us, that's right. Someone owes us money. An account receivable is what the customers owe us for a sale or a service that we have provided them. Very good. How do we end up with accounts payable? Yeah, it's what we owe to others. You're reading my mind now, Melinda. It's the amount that we owe to others, to our vendors or to our suppliers. Payables, yeah, payables can be notes or loans. We have the accounts payable are what our customers or what we owe our customers. Accounts payable are what we owe our vendors or our suppliers. If we have a note payable, then we probably owe a bank, or we could have signed a note to one of our vendors. It's basically a written promise to pay. Right? And if we have, a loan is what a note is. Okay? We need to be able to calculate the ending balance of an account. We did that with here in this example, like with our cash here. How did I come up with what my ending balance was? I knew that if I had a debit of $10,000, another debit of $700, a debit of $2,000, I would have to subtract the $700 from that, and that's how I got my balance in my account. So you need to know how to compute a balance in an account. If we had an account that had a credit balance, and I don't know if we had anything here really. Well, we had our service revenue that has a normal credit balance. We started with 4,000 and we added 300. So our balance would have been 4,300 before we did our closing entry. We have closed this. The question, I believe, is going to just be in words for this one. Someone asked, will there be T accounts or in words? But what you probably want to do is draw a T account if you need to compute a balance on your scratch paper. Just draw yourself out a little T account and write the numbers down just so you don't get jumbled up in what they're saying. Okay, that it just helps. It helps me if I make the little visuals as I go along, and I just can't imagine how it's not going to be helpful to the majority of you. Some people don't need it, but most people need those little things to jog their memory as they go. Chapter 3. Chapter 3 is our wonderful accrual accounting and income. That's where we talked about accrual versus cash basis accounting. When do we recognize our revenue? When we are doing accrual accounting. Remember, recognize means when would I do my journal entry? When the service is performed, right? When it's earned. We record revenue when earned. So once the service is performed, it's earned. Doesn't matter when cash passes hand. When is revenue recognized? When we are using cash basis. When the cash is collected. So it's actually when cash passes hands, and that is correct. And and remember that expenses are the same, not the same, because an expense is different than a revenue, but I mean when you're using accrual basis for expenses, then when the expense is incurred or the cost is incurred, that's when we record it. If it's cash basis, when we write the check or pay the cash for it. When do we have to do adjusting entries? When I'm closing the books, it's closing entries. When do I do adjusting entries? When do I do them? The question is why, but I'm going to ask you now, when do I do adjusting entries? At the end of the accounting period, I do adjusting entries. Why do I need to do adjusting entries? Are you looking for the answers? I don't see any answers popping up. Okay, so I'm getting some answers now. I'm getting okay. So here's where we're going with this. So we know we need to do the adjusting entries at the end of the accounting period. I mean, that's where we were. And then I ask why we have to do them. I have and I'm not saying names here. I'm just going to say the different things we get, and I'm going to say yay or nay to the answers we're getting here. So to adjust for errors, okay, I will tell you that if I am fixing an error that I found, a mistake, it's a correcting entry. That is not truly an adjusting entry, it's a correcting entry. If I recorded something into supplies that should have been recorded into inventory, then I would take it out of supplies and put it into inventory, and I corrected it. Okay. Unregistered transactions, I could go for that. Unregistered transactions, something that's happened, like we have an accrued revenue that we haven't yet put on the books, or accrued interest, that's interest receivable or interest expense that isn't on the books yet. So those are unregistered transactions. The trial balance needing to be up to date. Absolutely, our balances need to be up to date, and the way to get them up to date for our accruals and deferrals is to do adjusting entries. Like when the payments go directly to the bank, when we're doing our bank reconciliation, those are not even really adjusting entries. Those are just doing we're just doing entries. We have reconciled the bank, and we now need to increase our cash or decrease our cash and offset the appropriated accounts. That's just journal entries. It's not really adjusting entries either. Let's see. To ensure that everything balances out evenly. I'm laughing at the comment after that, not at what I just said. I'm laughing at what was said after that. But anyway, the everything should be in balance all the time, because debit should equal credits. Yes, depreciation. We have to record our depreciation, right? That's an adjusting entry. So we have to record depreciation expense and accumulated depreciation. Classify accumulated depreciation for me. Is that an asset, a liability, stockholders' equity, revenue, expense, accumulated depreciation? Classify it. Accumulated depreciation. Where does that fall in the rules of accounting? Okay. It's a contra asset. If you recall, it reduces or offsets the amount of the asset that it is related to. We have other contra assets that we will be tested on. So we need to do adjusting entries for our deferrals. Deferrals are items that are already on the books, such as we have purchased supplies, or we have prepaid insurance, or unearned revenue that's on the books. Those are all examples of deferrals. There will be others, but those are examples of deferrals. They're items that are already on the book, but we need to move them either from an asset account to an expense account, or we need to move them from a liability account to a revenue account in the case of unearned revenues. So those are deferrals. It's some item that's already on the book, but if we don't make an adjusting entry, we're either going to overstate our assets and understate our expenses, or overstate our liabilities and understate our revenues. If you recall, every single adjusting entry included at least one income statement account, therefore a revenue or an expense, and one balance sheet account, and that is usually an asset and a liability. Okay. Does it seem like it's been forever since we talked about this? Yep. And so you move away from this, and then you come back to take the test, and it makes it harder to do. But it's not it's not a hard test. You can all do this if you just prepare with this study guide. Accrual, what type of entries? What type of entries do we need to adjust at our accruals? Salary is a big one, right? We owe our employees salaries at the end of the month, which they have already performed the services for us. They've worked for us as the business, and so we have an expense. We need to get that on the books to make sure that our expense for the month is matching up with the revenues. That's one accrual. We would accrue interest expense, as I said. If we had a note out, we would accrue interest revenue or interest income. If we had a receivable out there collecting interest. Income tax payable, we're going to accrue our income tax expense. Those are all just examples of accruals. Those are items that are not yet on the books that we're going to put on the books. So again, Chapter 3 had all of those entries in it. You can flip through, and then we did the closing entries, and what we did still in Chapter 3, and that was where we zeroed out our temporary or red accounts. So if you if you want to go through and see the process, this spreadsheet that I did the one time, we did the whole process here and just the little problem. If you remember, we did the journal entries, and that's what we did, and posted them, and then we did adjusting entries down here somewhere. There are our adjusting entries, and then we did the closing entries of where we went in and zeroed out, and everything was through the whole process. Somewhere I had the financial statements, didn't I? Yeah. Well, trial balance. Yeah, we did it all. So I can repost that that spreadsheet too, and it just lets you see the journal entries all the way through the process of how we got from beginning to end if we did the whole accounting cycle. And so again, we just zeroed out we zeroed out revenues to retained earnings, and then we zeroed out our expenses to retained earnings, and we zeroed out our dividends to retained earnings. Do you remember doing that? So flip through Chapter 3 and look at those entries as you go. Chapter 4 was the cash chapter, basically. So what are the separations of duty? Give separations, examples of separations of duty. You need to know who should open the checks when they come into a business. If there's checks in the mail, you need to know if the accounting department should open all the checks, do all the deposits, or if maybe someone in the mailroom should be doing that. So just flip through the little, and that's really all there is. It just asks about cash, basically. How do you protect your cash? So look at separation of duties with cash, related to cash in Chapter 4, and you should be good with that one. On bank reconciliations, the questions they're not tricky, but you just have to be sure that you really read them carefully, because you might say, oh, there's the deposit in transit, but it might say that you're adding the deposit in transit to the book side instead of the bank side, or it might say they call them outstanding deposits. Which is correct? What do you do? Do you add the deposit in transit to the book side or the bank side, or do you add the outstanding deposit? Well, they're not called outstanding deposits. They're called outstanding checks when you've got checks standing out. So make sure you read carefully. Try not to get in too big of a hurry and think, oh, that's it, without reading all the choices, because that's where you'll mess up. Of course, if you have a deposit in transit, it does get added to the bank balance. If you have an outstanding check, it gets subtracted from the bank balance. Service charges, interest earned, any errors. The service charges and interest earned would go on the book side. Errors, it would depend on if the bank made the mistake or you made the mistake, on whether it goes on the bank side or your book side. And again, we're coming back to review controls over cash, especially cash sales. So you're going to want to look at this chapter, flip through it. Anybody have any idea what accounting function can only be performed by a CPA? How about auditing? Only a CPA can perform the auditing function, the external auditing. Yep. So anyway, that's one that you need to know. What accounting function can be performed by a CPA? Auditing. What is petty cash? And know the journal entries for petty cash. Did we do that? Okay, we did do petty cash. Yeah, because there's the cash short, cash over account if you're short, right? So when you establish a petty cash fund, it's petty cash, and then you reimburse it to the different expense accounts, right back to cash. You don't use the petty cash account again. If you are short cash or over on cash, you use an account called cash short or over. So you can review that as well in the Chapter 4 and look at those entries. Chapter 5, know and explain credit terms. 2/10, net 30. I saw somebody use this as one of their concepts and explained it very well in their discussion board concept. This means that, of course, 2% discount if paid within 10 days, net and 30. The way the question lines out for you is it'll say something like, you have an invoice dated so-and-so for so much money, right? And these are the terms. And then it'll say, oh, do you, if you pay it by the 30th, do you get, the discount amount, whatever it is? Or if you pay it by the 30th, do you have to pay the amount of the invoice plus the discount? It gives you 4 different choices, and one of them's right. And it may not be the one that you first think's right, but if you read them carefully, you will know. But because you'll either have to know what the discount would be or how much you pay by a certain date. So 2%, 10, next 30. So if I have a $2,000 invoice and I pay it within the 10 days, how much discount am I going to get at 2%? A $2,000 invoice that I pay within 10 days, how much discount do I get to take? In this example, 2% discount in a $2,000. Yep. Okay. You guys got this. How much would I have to pay if it was 30 days after the invoice date? If I use, yep, you got it, $2,000. Okay, so you should have that. There's more questions than it seems like there should be relating to shipping terms of FOB shipping point and FOB destination. They actually, I heard a text coming on my phone. I was trying to decide where I left it, but I left it clear out in the other room. So let's see. Shipping point. They'll say, who pays the freight? And who does the inventory belong to? So if I'm FOB shipping point, who does the inventory belong to when it's driving down the road? If I'm FOB shipping point. Yeah. Shipping point, who does the inventory belong to when it's going down the road? Okay. Okay, we're getting some different answers here. If it's FOB shipping point, who pays the freight? Okay. FOB shipping point means when it leaves the seller's dock, it belongs to the buyer. Okay? When it's shipping point, as soon as it leaves the seller's dock, it belongs to the buyer. So the inventory is the buyer's the moment it leaves the dock. And the buyer also pays the freight charge. If it's FOB destination, it belongs to the seller until it gets to the dock of the buyer. And the seller pays the freight. Uggs, right. Okay. Okay, so it really makes sense when we stop and refresh. But I was surprised. I mean, I think there were I saw 3 or 4 questions about that, and I thought with all the concepts in the book, it was interesting that we were hitting the shipping terms as many times as it was. So who owns inventory when it's in transit? So, and of course that would relate to who pays the cost. So does it make sense to you now? Okay, when it leaves the dock of the shipper, okay, good, because that will help you to answer the question if it makes sense. Okay, be able to use accounts receivable T account to figure cash collected from customers. You just had a question on this type thing on exam 3, where it gave you a beginning amount maybe and credit sales, or maybe it told you how much was collected and they wanted you to figure the balance, but they threw an accounts payable amount in there too. Threw off a lot of people because they threw accounts payable in, and accounts payable had nothing to do with the problem. And I would tell you that may be the thing that catches you on a lot of them. There's more information than you need, and so you have to be able to sort the information. And I know that's kind of scary, but that's just the way it is. So if I know how much my beginning accounts receivable is, and I know how much my credit sales are, and I know what my ending accounts receivable is, then whatever I have to credit to make that ending number come up is how much cash I've collected. There are 2 methods for accounting for bad debts. Those are the allowance method and the direct write-off. The direct write-off method is not in compliance with GAAP, so you need to be using the allowance method. If you remember, we used either the income statement approach or the balance sheet approach to come up with that amount. If we were using the income statement approach, whatever amount we calculated as a percent of those sales was the amount we used in the adjusting entry. If we were using the receivables based on aging, whatever amount that we calculated as the amount as uncollectible after we looked at our invoices was the amount the balance needed to be in our allowance account. So we had to take into account what our beginning balance was. Do you remember doing that? Maybe not so much. It was like a bad dream, wasn't it? And then we calculate net receivable value of accounts receivable by taking our gross receivables less our allowance for doubtful accounts. And allowance for doubtful accounts is a contra asset account. You may need to know that. How do we calculate simple interest on a note receivable? If I have a $1,000 note that I'm going to keep for 3 years and it's going to earn 5% interest, what is the total interest I will earn on that note? A $1,000 note, 5% interest for 3 years. Simple interest. Okay, I have a winner. 150. 1,000 times 5% for 1 year would be $50, and for 3 years, $150. That's simple interest. Nothing tricky about using the present value, future value tables. It was simple interest. Interest doesn't earn interest when we do simple interest. Okay. In Chapter 6 was our inventory chapter. We looked at the multiple step income statement of where we computed our gross profit at the beginning of the income statement. Sales minus cost of goods sold equals gross profit. Know what the periodic method of inventory is versus a perpetual, and in which situations are each used. Perpetual, of course, is ongoing. Periodic is when we go out and count at the end, and we might use periodic if we have lots of low-cost items. But you can, again, look that up in Chapter 6 and see what the book describes that as. Inventory is an asset. It is a current asset. When we sell it, it becomes an expense, cost of goods sold. These are answers to questions again. This is an example of the matching principle, another answer to a question. Note the correct order of items on the multiple step income statement, including gross profit. This is where they give you 4 different choices, and they might say something like you put sales first, then gross profit, then operating expenses, then cost of goods sold. Or they might say you put sales first, then operating expenses, then, so they're going to list you 4 different orders, and only one of them's right. And of course, depending on what accounts they pull, will tell you they don't use the same accounts in each one, but you should be able to pull the order of those, because it is sales minus cost of goods sold equals gross profit. Then you have your operating expenses, and then you have your income from operations, and then you have you get down to your net income going that way. Okay, you need to know what FIFO means, what LIFO means, what weighted average means, and what specific identification means. If FIFO is used, the ending inventory, does the ending inventory cost more or less? This is a hard, when you see something like this. If FIFO is used, ending inventory is the most recent items purchased. If LIFO is used, ending inventory is the oldest items that you had purchased. Okay. Who would use specific identification method? That's going to be people who have identifiable objects by VIN numbers or by serial numbers, or they're just more unique, one-of-a-kind items like fur coats or diamond rings, that type of thing. That would use specific identification. And explain what lower of cost or market is. If you remember, that is just where we make an adjustment if the market price or the cost to go out and buy new inventory is less than what we have our inventory on the books for. That's lower, recognizing our inventory at lower of cost or market. Where are we at on time? Okay. Chapter 7, book value or carrying value of an asset. That's our cost of that asset. The historical cost minus its accumulated depreciation. Land is not depreciated. For number 2, we do not depreciate land. We need to know what 3 pieces of information that we must know in order to calculate depreciation, and that is the historical cost, the residual value, and the life. You need to know when you would use depreciation versus amortization versus depletion. Depletion is actually for natural resources, and amortization is for intangible assets like patents and copyrights and things like that. We need to know how to figure the gain or loss, which is the difference between book value and the amount realized. So if I have a $10,000 truck that has an accumulated depreciation account of $8,000, my carrying value is $2,000. And if I sell that for $1,000, I have a loss of $1,000. If I sold that $2,000 book value carrying value truck at $4,000, I have a $2,000 gain. Okay, and then we need to be able to calculate depletion and amortization. Those are going to be more straight line type depreciations or calculations. Chapter 8, know the definition of trading securities available for sale and held to maturity securities. So look those definitions up and know what the actual definition is so that you can pick the answer by pure definition. You do need to be able to calculate the present value of a lump sum and of an annuity. You will be given small tables, present value tables, in order to do that. So you would just need to know when you need to use the annuity table versus the lump sum table. Okay. Know the difference in short-term and long-term investments. That's the time, right? Short-term investments are less than a year. Long-term is more than a year. And how do we determine how to account for long-term investments in stock? Remember, we're going to have the equity method, right? Depending on the percentages. Do you remember that we had percentages with that? And, you know, I can't right this second recall the percentages, but they're depending on the percentage you own in the business determines how you record it. So look that amount up too and study that in Chapter 8. Chapter 9 is more terminology, current, long-term. That's just the time frame. Give some examples of current liabilities versus long-term liabilities. Current liabilities are going to be your salaries payable, your interest payable, your income tax payable, that type of thing. Long-term will be long-term notes payable, bonds payable. Look up callable and convertible bonds just for terminology and definition. Know how you record the payment of bond interest. That's going to be if we have the bond recorded as a premium or a discount, what would the entry look like to record that payment of the interest? How is the issue bonds recorded at par, a premium? Okay, so it's going to ask you, they're going to use the 102s or the 97, and that's also something that was just on Chapter 3 or Exam 3, and some people struggle with it a little. If something says that I have a $100,000 bond issued at 102, that means 102%. So I would multiply my 100,000 by 1.2%, and that's going to be a premium because it's above 100%. If I issued it at 97 or 97%, it's going to be a discount because I would issue it at below face value. A bond is issued at a discount when the market interest rate is more than the face interest rate, and it's issued at a premium when the market rate is higher than the face rate. That's because someone could take that same amount of money and invest it at a higher interest rate, and so you have to let them have more money when you are loaning money to them in this liabilities chapter, or they're loaning money to you, they're investing. Where does the discount on bonds payable appear on the balance sheet? It's a contra liability account, right? It belongs right next to the bonds payable. And how is it used to calculate the carrying value of the bond? It's the face amount of bond payable minus the discount, and that gives you the carrying value. Look at the pure definition of what is a capital lease and how do we record it. We record it as an asset or as a liability, depending on, in this liability chapter, we are the person who is having the liability side of it. Let's see, we just did Chapter 13. That should be pretty familiar. We just did the statement of cash flow not too long ago. You should be comforted to see you really only need to know 3 types of things out of Chapter 12. What is the purpose of the statement of cash flow? To know where our cash came from and where it went. How do we identify the indirect method from the direct method? We start with the net income on the indirect method, and we need to know the 3 activities. And so the 3 activities are operating, investing and financing. No, some examples, well, financing is to sell stock or to borrow money or to issue bonds or pay dividends. Investing is the buying and selling of fixed plant assets. And operating is what we do in the normal course of business, so increases and decreases in our receivables or payables, current liabilities, current assets, that types of things. And then back to Chapter 10. Did you like how I just skipped right over Chapter 10? Chapter 10, retained earnings represent the cumulative earnings over the lifetime of the business less any dividends paid out. Par value is an arbitrary amount assigned to stock when you are doing getting ready to do a stock issue or initial public offering. Why would investors purchase preferred stock? Because they are guaranteed dividends ahead of the common stockholders. Cumulative means that if they don't get their dividends paid for a year or any number of years, they get to go back all those years and get those dividends before the common stockholders get any dividends. Yeah, so you need to know how to do a stock transaction. If we issued stock for dollar par stock for $20, yeah, so if I have a dollar par value stock and it's sold for $20, by what amount is cash increased and what amount is common stock increased? So my common stock would be increased by $1, my cash would be increased by $20, and my paid-in capital by $19. Know that treasury stock is stock that has already been issued and we've gone out on the open market and bought it back. Why would we buy it back? Maybe we want to do a stock distribution to our employees and we don't want to give up more ownership. Maybe it's selling at a lower price and we want to go out and pull it back in while it's selling so low and try to increase the value of our company by doing that. A cash dividend, to pay cash dividends, the company must have the cash and retained earnings. And the two important days are the declaration date and the date that it's paid. Know how stock dividends affects you. It actually it doesn't affect your overall retained earnings, but it changes. You have more stock outstanding and less retained earnings, but the overall stockholders' equity, I guess, stays the same, and that is the same for a stock split. Okay. Do you have any major questions that you can think of, or are you just like, oh my gosh, I'm bored to death? Kind of fast. Yeah, I went fast through it. Yeah. So if you think of any questions before you get ready to, can I go back over number 5, please? Yeah. Chapter 5, number 5. Net realizable value of accounts receivable, that one. Yeah, the review quiz is due Sunday. And the exam then is due the next Saturday. So the final exam is due a week from Saturday, but not all testing sites are open on Saturday, and they're certainly not open till midnight on Saturday. So you're going to have to get those in. So the review quiz is due Sunday. The discussion board concepts is due Sunday, okay, of this week for my class. And I think that Susan had said she already had hers done, so she might be a valuable resource to you guys. Okay, Chapter 5, question number 5, calculate the net realizable value of accounts receivable. If I have, get to the bottom here, if my accounts receivables have $200,000 and allowance for doubt, doubtful accounts, or uncollectible accounts has 15,000, then my net realizable is my 20,000 minus my 15,000. Okay? Oh, Susan hasn't taken the quiz, just finished the 30 points thing and all of Chapter 13. Well, good. The quiz isn't too bad, but you'll want to do, if you go through the study guide some before you do the quiz, you'll come near getting the 20 points on the quiz. And I know some people are really to where they need every point they can get, and the quiz and the discussion board are, if you do what you're supposed to do, then you're going to get those points, and that helps your grade. And the other thing, and I don't know, somebody brought this up, and I think you brought it up. I don't remember if it was brought up in this class or in, if it's brought up in a seminar or if it was brought up in an email. But have you all read your syllabus where it talks about if you missed one of the exams, then you can use the percentage off your final exam to fill in for that? Okay. Okay, well, maybe it was Blue. One of my students, was it you, Blue, who asked me that? Yeah. Well, yeah. It doesn't say anything about if the lowest exam gets, if you get a better score on it, but somebody asked me about, well, what if I had a low score? Can I replace it with the better percentage off of my final exam? And amazingly to me, because we've used this same syllabus and that verbiage has been in the syllabus for years and years and years, and no one had ever asked that. So, yeah, so that was, you had asked me that, right, Blue? You're the one who asked, aren't you, who had said, could you get a better, yeah. So she picked up on that, and so, I mean, it started a conversation with me. And, and I'm thinking, if somebody just doesn't do what they're supposed to do and then they can replace it, then why shouldn't someone be able to replace one of their lower scores if they do better on the final? So if we need to do that, we can. For you guys, Susan, that would be up to your instructor, and maybe you're not doing that bad on the scores, but you might try running that by them of how can we do that. So read that section in your syllabus. Yeah, that's what I'm saying, Glennis. Because if you've been here and you've been doing everything you're supposed to do, and then you say you got and it would be percent. So if you got an 80% on your final exam, then you could go back and get 80 points on one of your other tests. Okay? And you can thank Blue, not me, because Blue's the one who pulled that out and made me start thinking about that. And then I'm going to broach that with the statewide committee, because it may go away. But it's there now, so if you check your syllabus, you'll see it. I'll do it. I'll just do it for mine. I'll look. For most people, it's not going to make an ounce of difference. Yeah. Yeah. Yes, and there are the low. Shad had said he hadn't noticed the drop scores either, and I just put that in my my grade book this week, Susan, so some of my students started noticing, oh, now I have a score, a grade book item that says score with dropped grade. So I had just put that in, but your instructor may have had it out there all the time. But it helps everybody. Oh, well, I see what you mean. But it should not hurt anybody's grade to drop the lowest homework and quiz grade, because even if you had anything that you didn't get a perfect score on, it will improve your grade. Now, if you had perfect on everything, it won't make any difference either, but yeah. Oh, you were all perfect. You know what? What I would do, Susan, is I would look. Sometimes you hear things that maybe you don't want to tell your other instructors, and maybe I should stop the recording. I say that every week, don't